Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, good morning, Jim. Always good to be with you on our Fridays together.
Bob, nothing says Canada Day like a U.S. shopping trip. So what kind of shape is the Canuck buck in to go across the border?
That's a good line, Jim. Canadian dollar sold off earlier in the year with we thought it would rally with, industrial commodities firming up in the first half of the year. And then it got whacked. Essentially, it was the discovery of not just one scandal, but two scandals, at pretty high level stuff. And that helped push it down. But our view has been that it's quite likely that the Conservatives will win the general election in October, in which case the end of Liberals screwing around would be a positive for the country and a positive for the dollar. So somewhere around here, we'd say that they would start to discount that with the dollar firming up going into October, and indeed it has been firming up. So that's going the right direction. The socialists in any country always think that tremendous prosperity can be created by depreciating the currency, but the best of all worlds is a pretty well steady currency, and after the election, of course, then it's going to be a different game for the currency, because then the good news would be in the market, and the bad news may be some financial distress in the fall being discovered. So we'll watch and see how it happens. But one of the things we have been looking for, as I said, Jim, is we call them our friends of the rally, which would be industrial commodities such as base metals and crude oil. They were likely to be positive into the second quarter. With this, you would have positive action in credit spreads and the yield curve into, the same sort of window. And that we've had. So this is the old thing about, hey, the first half of the year can be good, and it has been good. Like the first 4-month rally in the New York Stock Exchange was absolutely outstanding. And then I saw a story this morning that the rally in June itself has been outstanding. So, hey, we got good action. But overall, the stock market is very highly priced. And one we like to see is relative to wages. Often, they look at the PE, the price-earnings ratio, and analysts can do anything with their earnings estimates, and then you got people who want to buy the stock market. Then you got brokerage who want to get commissions. So then you have brokerage analysts come out and say, the earnings estimate is, it's going to increase 20% or whatever, So then that just makes the stock market appear at a better valuation and sort of rationalizes the urge to buy. But this, after mid-year, one more step here. The main thing was to have excesses discovered or accomplished in the second quarter. So as I said, valuations relative to wages, very high. And then you've had very good momentum surges. We've had very good rushes in sentiment, positive sentiment. So all of this is what was possible in the second quarter, and we're getting it. So we're very pleased about that. And then now what we want to look for is, let's look at commodities, which have been key to the rally. And you can have a low for lumber in October, and it sure did it last year. And you can have a low for copper in November, December, which it did. And you can have a low for crude oil, which seems to be the most influential one in pushing the stock market around. And that can have a low in December, January. So, hey, we were looking for the good stuff. We've got the good stuff. And then, let's just push ahead here a bit and say that maybe in August, all the best is in, and then you want to start looking for natural declines down to later in the year.
We'll have more with Bob Hoye in a moment, and also the answer to a listener question.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Bob Hoye. Bob, one of our listeners has a question. Their question, if and when liquidity problems hit the overall equity markets in the fall, causing a sharp equity market decline, then will the gold stocks also decline and potentially test those August 2018 lows again, even as gold possibly gets a safe haven bid?
Hey, that's got it laid out right. A good question. And yeah, I can't. I just agree with it. It's got it sorted out. Yeah, gold stocks underperform the big stock market in a financial boom, and this is what's happened. And also, gold's real price, which is the rational way of looking at gold, that's where you deflate it by the consumer price index, and it typically goes down with a great bubble, which it has done. But since late 2017, the gold as deflated by the CPI is building a base, and we'd say for this year improving on that. So this is good. So gold is beginning to act relative to commodities and relative to the CPI in the right direction. And this is important because you can point out the profitability of gold mining depends upon the spread between what they're getting in price for the bullion that they sell and how much it's costing them to extract it. So if you've got a lid or pressure on costs and there's a bid for gold, then they start making money again. And you've had some of the best bull markets in history for the gold sector have been in the deflationary post-bubble contractions, and they can go on for a long time. Of course, you've got the business cycle, the 3 to 4 year thing coming and going, but and then so that's the conclusion then on gold's real price is that it's doing what it should be doing within the context of a completing financial bubble. And then we assume that it will continue to rise and do what it does in a post-bubble contraction. And then that makes for the new bull market in gold stocks. But we have a problem, is that the big stock market is overdone now at about the right time. And then in the fall, it could have a problem as our listener questions. And it is a good question, and it is something that all investors should attend to. When you've got this kind of excitement in the markets, and we've had a very good rush in gold stocks, getting a little overbought, that it's time to take some money off the table and have some liquidity for when an illiquidity problem appears in the fall.
We'll have more with Bob Hoye right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, is China facing a small banking crisis right now?
Yeah, I saw a headline about that it was a crisis of some small banks who have, run out of the good stuff. Their reserves get loaned out, and loans turn bad, and then their reserves disappear, and that is a classic pattern. And you've got an interesting situation in China because you've got the political capital, which is Beijing, and it's communist. But the authoritarian communists are probably all long stocks and confiscating billions of dollars. And, I have no direct evidence of that, but you can guess it. So they're interested in keeping the bubble going. And then you have the southern provinces where the prosperity really is and the innovation. And this is an extension, the southern provinces, of course, are an extension of Hong Kong and Taiwan. And recently China wanted to do something authoritarian to Hong Kong, and there's been a protest, and that was sort of bypassed for a bit here. So it's going to be an interesting situation. Their stock markets have been weakening, and their economy has been slowing from fantastic to merely expanding. So it's going to be very interesting there when it gets into a more serious contraction. My guess is that Beijing will continue to demand huge tax revenues. And where are they getting those from? Well, the freedom-loving southern provinces who have created the prosperity. So there could be a political showdown there where perhaps a popular uprising, which has been spreading around the rest of the world, could become effective in China. It'll be interesting. You see the popular uprising in Oregon State here on the West Coast, which West Coast cities from Los Angeles to Seattle are all liberal left, and the state government in Oregon is attempting to bring through some draconian cap and trade stuff, control your life because of the climate. And the key part of the Republican opposition within the state legislature just left, got out of the state so that the government couldn't have a quorum and couldn't pass this odious legislation. But also there's been terrific protests by ordinary folk into the state capitol, big trucking rigs, cars, pickup trucks, everything. It's not being widely reported by the mainstream media, but if you look at a few places, there is a real popular uprising going on in Washington State, which is very important because, as I said, the main cities on the East Coast are all socialist.
West Coast.
And very destructive.
Is there a madness to buy junk bonds right now?
Oh, yeah. This is the amazing thing in a financial mania is that there are those people who are dealing in interest rates and maybe not so much in equities, but they want to get the highest return possible. And the highest return is the highest coupon, and that's junk stuff. And they're buying it like crazy. Corporations are issuing junk bonds like mad, and it just is a feature of a bubble that you get this kind of frenzied buying. And of course, companies are looking at it, and the interest rates are unusually low, so hey, why not raise as much money as possible? And this then becomes the major problem, because in the enthusiasm, everybody, corporates, governments, and individuals, take on more debt than they can handle. The economy slows down, and the economy is no way, even if you had a sideways going economy, that it can generate enough revenues to service the debt. And this is where, when in the post-bubble contraction, people just avoid debt like mad. People who have obligations want to get rid of them, and people who are owning risky paper all of a sudden say they want to get out. So then you go no bid for low-grade stuff. So this is our advice now is on junk bonds, high yield, all this sort of stuff. It's been a great party in it. You made lots of money, but it's time to get out and protect yourself.
Bob, have a great Canada Day.
And you too, and we're going to have a quiet day, but we're staying in town.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to us at info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Have a great Canada Day.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.